It's Monday, April 26th. This is The Street Live. I'm Catherine Ross, and I am joined by Jim Cramer. Jim, it's already a busy week to start off the markets, so what are you watching right now?
Well, look, I think that you have to take your cue from earnings. I think that today's best was Otis, and I think it's really interesting and not talked about enough. It had 18% order growth and 10% same-store sales, the equivalent, which is what you regard as being the deals that are made that no one counted on, also known as organic. What I thought was interesting was that the United States was a leader, and I felt that a little bereft that it was in New York and in San Francisco, you're not having it. But in towns like Houston and Austin, in Atlanta, you're seeing booming growth. And this is all part of Judy Marks's plan. She's a fabulous CEO. And I think you're starting to realize that Otis was indeed better spun off. Remarkable quarter. Remarkable. And stock deserves to be up even more than it is.
So, Jim, let's widen our horizons here, because we do have over 180 S&P names reporting this week. And you've talked about this over on Mad Money as well last week. But what are you watching in this slew of earnings that we're going to get?
Well, I need to see growth without inflation. And that was one of the reasons why I liked Otis. They had growth without inflation. Growth without too much emphasis on steel, on plastic, on lumber. Those are the pressure points in the system, and they're not going away. But the shortage in semis might be going away. And that's because the real problem with semis was that there's tremendous amount of semis that are the highest end. Some people would even say there's a glut, like Gelsinger said there's a glut. But on the lowest end, where the autos are, there's not a lot of building. And I think that's going to change. I think Taiwan Semi feels pressured into doing it. And I think those are going to be delivered. So I'm no longer putting the semi shortage front and center. But without this growth without inflation, what will happen is that it might force the Fed's hand to do something. We don't want that. If you're a bull, you don't want that. I'm also watching bubbles. I did that in real money. I don't think the bubbles are real. I think there are selected bubbles. But for the most part, you take a look at a proof point that gets a bid, and we talk about that. And, proof point was considered to be a ridiculously overvalued stock until today.
So let's talk about your real money column from this morning, Jim, because crypto really was a focus, as you mentioned. You talked about DOGECOIN, you talked about non-fungible tokens and Bitcoin. You focused on all of these bubbles, but you say that you personally prefer like the Nike shoe market to the NFT market, but the billionaires are able to keep the NFT market afloat, Jim. So what do you mean by that?
Look, I think that we're in this world. There was a time when there weren't that many billionaires. Missed those days. And now there's billionaires all over the place. And so there are plenty of billionaires willing to say that something's great. And it's not like, wow, that's a billionaire. We gotta look into that. It's more like, oh, another billionaire says that something's good. And I look at these non-fungible tokens and I just say, well, that's that's just ridiculous. Because there are people who are anxious to try to sell something that they bought in the NFT market, and there's no bids. Now, any real product has bids. Dogecoin, created as a joke. Sorry, I'm not going to do that one. I'm a seller of Dogecoin. I have Ethereum, and I have I've got Bitcoin, and that's because they have great scarcity value, and because I think that their store holds a value against the problem with the endless printing of presses in almost every country in the world.
So it was interesting, Jim, because this morning we got news that Thoma Bravo is buying Proofpoint. And I'm bringing this up now because you just mentioned Proofpoint. Now, this is the cybersecurity vendor. This is an all-cash deal for $12.3 billion. I mean, obviously, the storyline around cybersecurity has kind of been drifting away from the forefront of investors' minds with things such as the semiconductor shortage, which you say is not as much of a concern right now. But what do you make of this deal?
Less concern. Okay, so look, here's this amazing thing. Now, Gary Steele always came on Mad Money. Look, we're not about friends, but he's about as close as a friend you're going to get on the show. And what I thought was most interesting was he's getting 22 times EBITDA, which is just an extraordinary number. And a lot of people felt his company was very overvalued. It was difficult to turn this down. I know that Gary loved Proofpoint, but Proofpoint did have this niche. I mean, they were cloud-centric software as a service, and they also they were better than Microsoft in a couple of things. That if you get Microsoft, you wanted to have them, you augment your security by bringing in Proofpoint. So I think Gary did really well for shareholders, and I salute him.
So let's move on to Apple, because the news this morning is that it's investing $1 billion in a campus in North Carolina. I want to get to the larger news of the 5-year, $430 billion investment over on our Action Alerts Plus Daily Rundown video. So today, Jim, I want to focus on, this is one of the first major investments that we've heard of a company making post-COVID. So will we continue to hear about major investments in real estate in your eyes?
Yeah, that's one of the reasons why I love talking to Judy Marks Motis, because she's got the best, there's elevators in every tall building and escalators, and her order book is filled, and that just shows you that people are coming back, maybe not in New York, but through the rest of the country they're coming back big.
It is interesting to see how people are kind of separating out. And I made a point on my Twitter last week about how I think that this is a good moment for journalism to separate outside of the coast, right? Because we are very coast-centric, or have been in the past. And now we can kind of diversify and go to places that need national journalistic voices that aren't New York or California.
Well, my hope is that we get them, I think that Judy was saying, look, San Francisco, New York City, this is Judy Marks, CEO of Otis. You got to get outside of those cities to see it. You just got to. You'll see the cranes everywhere. You'll recognize that people aren't fearful. And maybe that's what's supposed to be. Like, I had thought that you had to be fearful. And then Dr. Gottlieb came out this morning and said, look, we don't even need to wear masks outside. I mean, I've always been a mask wearer outside. I took a long walk yesterday, and as soon as I see people coming, I put my mask on. Dr. Gottlieb says you don't need to do that. That's very important.
But you still need to wear them inside. And the reason that I bring that up, Jim, is because Best Buy was your mad dash based on a downgrade. But you've liked this company for a while now, and part of it is because of the COVID safety precautions that they've been taking. But do you think that now is still a time to buy this stock?
Yes, I do. 2.4% yield. I believe in the theory that people will continue to put money in their house. I don't believe in the theory that it's not going to be stereo systems. I know that there's other areas. Appliances are hotter. Whirlpool's hotter than Best Buy. But I continue to like Best Buy and think that nothing's changed here. Whirlpool up very big, obviously up 30%. And Best Buy is up, let's get this, 23%. Let me see. It's 15%. I was looking at the short position. So I think there's room to run. Now, the analyst is basically saying, look, this is not what people are spending on. They're spending their disposable income on other parts of the home. And I question that. And I think that Best Buy is good.
What about SKYWORKS Solution? Do you think that there's room to run? And before you answer, Jim, I just want to explain that when you look up this name on Google, one of the top questions is, should I invest in SKYWORKS Solutions? So let's get your take. Should you?
Yeah, definitely. Liam Griffin has done a remarkable job. He and David Aldrich, his predecessor. And I think that SKYWORKS is one of those companies that is worth a lot more now than it was before this deal was made. They bought, for a couple bill, they bought this division of Silicon Labs that is about automotive and Internet of Things. And now suddenly they're a company that's not just dependent on Apple and cell phones. So I think it's an extraordinary deal that is catapulting the stock through 200. And I think that's right.
So we've talked about earnings to watch. We've talked about Otis. We have Tesla earnings this week. And you were talking about, at Mad Money, the top names that you're watching. So not only do I want to hear a little bit of your thoughts on Tesla ahead of earnings, Jim, I also want to know what you think investors should be doing to really prepare for this earnings season.
Okay, well, Tesla tonight, we heard Elon Musk obviously going to be on SNL, that's fine, whatever. He's an entertaining fella. Tesla spent some time in the wilderness after it was added to the S&P. It came right down. And I think that Tesla's going to have a very good story about China. I think they'll give us a good story about Europe. The numbers continue to be great in America. I'd be hard-pressed to see whether he doesn't talk about solar, and that solar could be good. So I think that this is an all-cylinders conference call, and I think that if he takes the conference call seriously, it'd be very positive.
And what about for investors who haven't already been really doing their homework and preparing for this earnings season? What's the last-minute advice you have?
Write down where you would buy things. We got a Fed meeting. Let's say the Fed suddenly pulls the rug or says they're not going to continue to buy bonds. Let's say there are companies that are levered to whatever that is out of your control, gasoline, chemicals. Be careful with those. But if you've got a company that is not levered to any particular industry or any sort of bottleneck in an industry, I think you're fine.
So we're going to continue our discussion on this earnings bonanza over on ActionAlertsPlus.com, and we're also going to be discussing the portfolio's newest position. So come join us over there on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.